We do want to also now bring you a focus here on a stock that has more than doubled this year. I believe it's up more than 100% so far year to date, leaped to a 10-month high just yesterday after the company beat analyst estimates for second quarter profits. The stock we're talking about, Wyndham Worldwide, you see it there. How do they, as a hotel company, continue to build room for profit growth in tough economic times when people are just cutting back, not traveling quite as much? Well, joining us now with some answers is Wyndham Worldwide CEO Stephen Holmes. Stephen, congratulations on the earnings that seem to surprise the street.
Thank you very much, Margaret.
How do you grow a business in a time when people are traveling less? As you said, they're cutting back on their vacations. You've also got a big exposure to the timeshare market. How do you offset that?
Well, we're very well positioned in the marketplace, both as a leisure provider as well as an economy mid-scale provider of service for the consumer. So the consumer is still traveling for leisure, not as much. There's certainly demand across the entire travel spectrum is down, but it's down a lot less in the leisure side than it is in the corporate side.
The pullbacks from everyday consumers, you're saying, aren't as strong as what you're seeing on the corporate level in terms of business spending, business travel?
That's true. The people are still traveling to go visit Aunt Ruth, and they're stopping along the way at a Days Inn or Super 8. So if you look at kind of what's happened in the market, airport hotels are down, urban hotels are down, interstate hotels are down, but they're not down as much. So it's really a question of where you're positioned and also where you're positioned in the value spectrum. The economy mid-scale hotels that we have, for the most part, are built for value for the consumer, and that's what the consumer's looking for now.
You own Ramadas, you own Super 8s, an affordable section of the market you might characterize. Are you cutting room rates more? Are you offering more package deals to incentivize consumers?
There are more packages being offered. We're trying to encourage our franchisees, because we actually don't own any of the hotels. They're all owned by other people. We try to encourage them to keep the rate up if possible, because once it's cut down, it's a real battle to get it back up. But there are good packages that are available for people who want to spend a weekend or a long weekend away from home and spend some time with family or friends.
Now, your company, Wyndham, has a bigger percentage of the timeshare market than some of your competitors, like a Marriott. That section of your business is, I would have to think, very sensitive to credit availability of consumers right now, which, as we all know, is getting pulled back. How do you fix that? I mean, how are timeshares faring right now? How do you get people to buy in when they can't get the credit necessarily to do so?
Well, it really was an issue, and last year the issue came to roost when the credit market seized up, and we actually cut back the growth of our timeshare business, and we took the timeshare business down. Interestingly enough, though, both in the first and second quarter, our efficiency in selling timeshare is up. So of the people who tour, more of them are buying. A larger percentage are buying than did last year, and actually the price that we're getting is higher, so we're not discounting our prices. It's really a question of the consumer deciding what's important to them. And when they look at it, they want to take family vacations. They know it's important to keep the family together, even in difficult times. Timeshare is a product that does that.
One of your competitors, Marriott, has said that it may be taking a look at some of the distressed assets out there. They see opportunities for acquiring new real estate and the like. Do you see that as well? Are you looking at some of those opportunities for distressed assets?
We're looking at them, but probably with a little bit of a different angle. We think that we can be a real solution for people with distressed assets, distressed resort properties in particular, where we can come in and be a sales and marketing agent for them to convert their property into timeshare. So if you have a hotel that maybe or a resort where the bank is either foreclosed or the developer's in trouble, we can step in, take that product, put it through our timeshare machine as a sales and marketing agent for them, and move that product out. So we actually think we can be a big help in this environment.
Okay, so you are potentially shopping there for distressed assets. But we're going to have more answers, more questions with the CEO of Wyndham Worldwide, Stephen Holmes, when we come back from this break. Stick with us here on Bloomberg as we take a look into the hospitality industry. Welcome back to Bloomberg. We're joined by Wyndham Worldwide CEO Stephen Holmes. We're taking a look inside the hospitality industry as we try to digest just how the consumer is coping with this. We saw today that claims for unemployment benefits. Yes, more people are unemployed and claiming benefits, but the consensus by economists seems to be that the rate of the job cuts is slowing down right now. Do you agree with that? Do you believe that the payrolls are going to stay as they are? Do you believe further job cuts are ahead?
I think there probably are some further job cuts ahead. I don't think we're done with this trough that we're in right now. I think that as we come out of the summer, for businesses that are focused on summer activities like hotels, resorts, you really make your money during the summer. As we come out of that and we move into the fall, into the winter, when occupancies tend to be lower, there's going to be more pressure certainly on our industry. And so it's going to be very, very important that the credit markets are fluid enough to help businesses as they need to make it through the difficult times. Not for big corporations like us as much as for the small mom and pop operators, the small business owners.
A lot of CEOs that I speak with say right now, many of them have been forced to make painful cuts when it comes to the number of employees they have on staff or cut back on hours. And they say, you know, we've cut so sharply back. We don't necessarily expect to rehire that same number of workers when the economy swings back. Do you think that this sort of lesser level of employment is the new normal, or do you expect to rehire?
Well, I would expect that we'd begin to rehire at some point, but it's going to be the new normal for a while, unfortunately. I think that in order for businesses to get back into the growth mode, they need to have liquid access to capital. They need to be able to invest in the businesses to provide that growth. So I think it's all about the credit market in my mind. That's really where we need to see the improvement. And there has been improvement since 6 months ago, but there still is not enough improvement. We need to see more liquidity, more improvement, and that'll help the small business owner as well.
When you talk about the ability to tap into the credit markets, are you finding that lenders are that much more concerned about lending to a consumer-reliant industry, or is that more across the board, your assessment of the credit markets?
I think it's more across the board. We did several large debt issuances recently. We issued about $580 million of debt in May, and then we did a couple of asset-backed deals more recently. And so there was access to the credit for us.
Right.
The terms were not ideal. You know, they were good, they were fine, but they weren't ideal. And I think that it's going to take some time to get that more liquidity into the marketplace, not just for us, but across the board. And I think it's all businesses.
We got to head to break. Thanks so much, Stephen Holmes of Wyndham Worldwide.